So we have Matt Kindigan now joining us to dissect issues around that address and possible impact. Hi, Matt. Good afternoon. It was an explosive speech there, and it was not all nice and claps yesterday, Matt. But I mean, declaring a state of disaster is one thing, but does it really give the government the ability to tackle this issue of power shortages?
Yes, well, thank you firstly for having me on the program today. And yes, certainly it was a very difficult speech to listen to, although I suppose one thing to take into consideration is that the president is addressing the issue directly, which is good to see. In terms of the government's ability to address the power shortages, well, the state of disaster, unfortunately, the declaration of a state of disaster, unfortunately, will have very limited impacts on power availability over at least the next 6 months and maybe the next year at least. And our view is that power availability, rolling blackouts will get much worse before they get better. Generally, it appears that the measures are too little, too late. What they will do is that they will provide some benefits for ring fencing power availability for critical infrastructure like hospitals, for example. And we are probably going to see a bit of a boost in private sector investment. But to put the situation into context, the latest data that's been released has shown that power availability or power generation from Eskom in December 2022, so just a couple of months ago, fell to its lowest level since December 1998. So it's really facing a very precipitous decline in production. And so this national state of disaster is really going to struggle to make any meaningful difference over the next couple of months, especially as South Africa enters into its more power-intensive winter period over the next few months. So certainly we're not expecting to see any major changes or improvements to power availability for the next 3 to 6 months at least.
Yeah, so seeing that, I mean, electricity is like the engine of any economic activity. With this crisis now, I don't know if it was factored into all of those outlook that we had at the beginning of the year. I mean, how do we see this affecting those projections and forecast plans for 2023?
Yes, so I mean, the outlook is not great and the impact on growth certainly will be negative. We are currently in the process of reviewing our forecasts for South Africa. So Frontier View was previously forecasting growth of about 1.7% in 2023, which is already not fantastic, but we're very likely to downgrade that to about 1% over the next month or so. It's worth remembering there are a couple of industries that are still doing very well. So the ICT industry, the financial services industries, despite power cuts, they're a bit more resilient when it comes to the current situation. We're also seeing private sector healthcare doing very well, and the government has benefited from high commodity prices. But the really important industries for South Africa, the big export earners, mining, manufacturing, and the big drivers of employment, construction, for example, we've seen very strong declines in activity as a direct result of power cuts. So as a result, we are expecting foreign investors to take a bit of fright as a result of power sector shortages, and we are going to see much weaker growth over the course of next year, and especially if we see a situation such as a national blackout that lasts, 1 to 2 weeks. That would be pretty disastrous for the economy. It's not currently our base case, but that would have a very negative effect on South Africa's performance this year.
Yeah, Matt, I believe South Africans need to learn a thing or two from Nigeria. I mean, these power cuts, Nigerians have found alternative and are hardly, moved by power cuts from the national grid. But obviously, this is going to have an impact on the rand. Where do you see this heading? Is it resilient enough to still, hold some value?
Yeah, so very interestingly, the rand, it's not a terrible story for the rand. And this is because, quite interestingly, the rand is a very highly traded emerging market currency. It's one of the most highly traded currencies. And its value often is a reflection of global sentiment towards emerging markets in general. And so the upshot is that in the second half of 2023 in particular, we are likely to see the global economy accelerate as the Chinese economy in particular accelerates. And we're seeing stronger than expected growth in Europe and North America. This will support the value of the rand almost certainly, especially in the second half of the year. However, it will also be pulled in the other direction. So we're likely to see, as power cuts get worse, especially in the event of a national blackout, the rand will face significant downward pressure. And also, as we get closer to the election in April 2024, there's going to be much greater investor uncertainty because South Africa will have a very highly contested election. So the takeaway is that we're expecting the rand to probably lose value this year. It will end the year below $20, above $20, 20 rand per dollar. But this will be interspersed with periods of significant volatility and depreciation, and some periods of appreciation as well. So a bit of a rocky period over the next 12 months, in our view, for the rand coming up.
All right, Matt Kniga, thank you so much for your time this afternoon, and have a great weekend.
Thank you. You as well.